Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Nio, ticker symbol Nio. And yeah, I am recording this during market hours on September 23rd. And the reason for that, the reason why I'm bringing you guys this video is because you effectively voted on it. I did put out this post earlier today, so this is on the channel on the posts tab. It might also show up in your feed on YouTube, but something that has kind of made me a little bit concerned about Nio, a number of things actually. One of those things is that I noticed this morning that max pain for this coming this coming Friday, September 26th, is now 7. It was 650 yesterday, and price is around 7, so it's making me a little concerned. And with that, I just asked for 5 likes. I've tried to ask for 10 in the past. We didn't hit it, so thought I'd do 5 likes. We got 9. Thank you so much for the engagement. I will try to do more stuff like this, so if you do see it, please engage. Helps the channel grow, and it also just, lets me know who's engaged, who wants to know about this stuff. But yeah, so this does make me think that there is a little bit of concern there. And then also another post from a day ago is that I shared this video, which has been very popular. So, thank you so much to all of you who tuned in. That video got 1.9 thousand views so far. That's a lot for me. This is a small channel, and that really does mean a lot when a video takes off like that. And one of the things I have expressed a little bit of concern about this, with the title being Nio About to Squeeze. We are emotional beings, and with a video with that title, with Nio where it's at right now and getting that many views, that suggests to me that those are signs of euphoria. So I did cover it yesterday in the after hours update. I'll be doing another one of those today, but that made me a little bit concerned. And also looking at some options data, I'm pretty concerned about Nio pulling back. And so I'm going to go over that, and then I'll get into the chart towards the end and kind of get into what I'm doing, which, I'm kind of taking it day by day, evaluating as things do change. But yeah, one thing that I do have to say before getting into this is, not only is it about number go up and we make money, it's also about managing risk, looking at the data, trying to understand it. And so that is, what I'm trying to do here with these videos. But anyways, from that post, this is the same data that I had there. I just reformatted it to be a square. What I really want to look at is the data from the table and this chart here. And in Unusual Whales, if you're not familiar, this is under the Greek tab, or the Greeks tab. And that's how we're able to look at this data. And so as we can see, for September 26th, this coming Friday, max pain is $7 a share. And we're currently trading right around $7. You can see it up here, $6.98. We were above 7 earlier today. But I do think that with max pain moving higher than the price, that is going to kind of suppress the price down, because when we're above max pain, that means bulls are in control. When we're below max pain, that means bulls are either losing control or the bears have that control. And so I think the bulls are starting to lose control, especially if we look at the next 2 max pains for October 3rd, so next Friday, and then October 10th, the Friday after that. Max pain comes down to 650, goes back up to 7 later for the monthly, I should note, in October. But really, that's where we're at, and or it's below. So I think that we could be starting to lose some momentum. So wanted to express some caution around that. Also looking at the historic max pain here. I'm just going to enlarge this. I wish the lines were a little bit bigger, but I think this will help to illustrate a point that I would like to make, where, over here, where the cursor is, we can see that max pain was max pain was $6 and the close was $6.22. But then we saw this big divergence there, where the max pain for that Friday, I believe, let's see, the 15th, the 16th, I'm not exactly sure which days those are. I'm just going to check the calendar here. So the 19th, so the 15th, that's the beginning of the week. That was the Monday. And we see this pretty big divergence. Max Pain at 450, the closing price on Monday, September 15th, much higher. And so that means that bulls have, total control. But then as bulls get greedy, they start to buy contracts that have higher strikes that are less likely to close in the money. They're cheaper, the premium on them's cheaper, but they're higher up and they're less likely to close in the money. And then so whatever that premium is, even though it's cheaper to buy them, that premium is more likely to go to zero than, buying calls with strikes that are lower. And so with Max Pain being 450 there and the closing price on the 15th being 650, there's a pretty big gap. And then we see in gray, the stock price rises up. But then following that, because bulls are getting greedy, thinking, oh, it's just going to keep going up, that Max Pain has risen to then 650 for this coming Friday. And now it's actually at 7 where price is. And so whenever Max Pain does kind of flip above the price, it kind of serves to suppress the stock price. So that's one thing that has me a little bit concerned about Nio. But also there is some options data. And so this is something that I was looking at yesterday. So this is the net call and put premium from yesterday. So September 22nd, you can see it up here on Monday. And so things throughout the day, ignoring, just to the right of the cursor here, things didn't look too bad, but they didn't look great. So what we see in yellow is the stock price coming down. I'll go over the chart in a minute, but just to note, stock price coming down. We have net put premium being more or less flat here. So bears are not in control. Bears are just chilling. And then, but net call premium, it's down 1.5 million or so. And then over here, we can see that net call premium is down over $2 million. Net put premium is up over $500,000. And so that's not good. Call premiums going down. That means people are selling calls. They're not bullish. Put premium, net put premium, I should say. These are nets. Net put premium is going up. That means people are betting on this going down. But then very surprising, in the last 15 minutes of the trading day, net put premium coming down, going negative. So that's good. But we see the net call premium really falling off a cliff there. So going from up here at, 3:48, so 12 minutes before the market closes, we see that, net call premium of $2.11 million down. But then it ends the day negative 13.13. So we saw over an $11 million drop in net call premium in the last 12 minutes of trading yesterday. So that's pretty bearish. So that's making me think this is not so great. And one of the nice things when you see net call premium or put premium, whenever it changes like this, when it's vertical, it means there's a really large order. Or in this case, with the big stair steps down, there are a number of very large orders, i.e. whales, that are selling calls, it looks like. And so we can pinpoint that time, the last 12 minutes of trading, to see what those contracts are doing. And so I did that yesterday. I didn't want to do a video on it because I didn't want to get ahead of myself being bearish. I tend to do that if I'm in the green and I think things could be topping. I get a little bit antsy and I trim or I sell, whatever it is. I haven't done that yet. I have placed some orders. I'll talk about them. I've considered my options, but I'll do that in a minute. So anyways, this is looking at the flow from Unusual Whales, and it's not paused, but there are no big orders on Nio right now. But what we can see here, this horizontal line that goes across that separates the days. And so we have one big order for today, September 23rd, and that is filtered. It's behind Ed, but that is filtered by a minimum premium of $200,000, just so you're aware. You can filter that. I like to start at $1 million to see really big orders, but oftentimes when you get into $1 million swings in contracts, it's usually broken down by maybe it's one order, but it's filled via different exchanges, stuff like that. So you don't see one massive, multi-million-dollar order. You just see a number of, in this case, $200,000 or more. And so what we see in this data, so now looking at this below that horizontal line and above this horizontal line here, we see September 22nd. And so the things that stand out to me with this, 349, 346 right here, 346, that's a put. We're interested in calls. That's what I want to look at. So at 349, we start to see a lot of orders being filled here that are the $5.50 strike that expire in November. So for the monthly expiration, November 21st. And so it's like, okay, we're well above $5.50. So maybe that's good, maybe that's bad. I don't know. We'll have to look at it. If these calls are being sold, that means people are taking profits on that contract and they think it's going down. And actually all of the data over here, I guess you can't see it all because I'm covering some of it, but we see that this is either neutral or bearish. Even though it's calls, this suggests that they're being sold. And we'll look at that in just a minute. But we also see $3.50 calls, same expiration, November 21st. Those are also moving around and it looks like they are bearish, but we can click into those specific contracts to get an idea, to get an understanding. Is open interest increasing or decreasing? If it's increasing, that means people are buying calls. That's bullish. These are in the money and that could be setting up for a squeeze. But if they're selling, that could mean that the move is over if the open interest is going down. So if I click into any one of these, it's going to pull up the $5.50 strike call there. And I believe Ed is going to be blocking some of the data, so I'm going to have him step aside for this. But what we can see, it's a little bit small for you guys, but just above the cursor here, we can see that open interest went down. And so that's saying that these contracts were being sold. And so if I just up here, I'm just going to change this to go back a day. And so we see that same data we were looking at, that drop off a cliff here. And over here, this is the data for the 22nd. So we're seeing that big spike in this contract, $5.50. These candles represent $1.48 million. And then over here, $3.568, almost $6.9 million. So, that is, let's see, 3.5 plus 1.5, that's about $5 million moving out of this position. And we can see that reflected here in the data. Total premium, $5 million. Looking at the data up here, those are the only really, candles that stand out in this for the day. So $5 million checks out. And so on that day, on the 22nd, the volume was almost 31,000 contracts. And the open interest was 32,000. So that could be reducing the open interest down to 2,000 contracts. We didn't see that. It could be worse. But what we did see is a reduction in open interest by about 12,000, bringing the open interest from 32,000 to 20,000. So that's bearish, or at least that's no longer bullish. So I think that's something really good to consider, and also good to consider that this is the $5.50 call. That will come up later in the video. But I've discussed that one. Let's look at the $3.50 call. Also the same expiration, like I said, November 21st. And so I'm going to rewind this one day. So we're looking at September 22nd data. We can see a big candle at the end of the day. I like this. I don't know if you guys can see the number because it's probably a little small on your screen, but where it says candle premium, $6.9 million. We all know I like sixes and nines when they're together. And $6.9 million, looking like these calls were being sold. So that's a lot of money. $5 million, now here about $7 million. That's a lot of money. And if we look at the data down here in the table, we had an open interest for these contracts, very deep in the money, by the way, at $3.50 call. Open interest was 61,000, and about a third of that volume was traded. on the 22nd, 20,000 contracts, $6.9 million total premium, represented by this candle here. And so from that, on the 23rd, we then saw a decrease in open interest by nearly 17,000 contracts, going from 61,000 to 44,000. Again, that's, if not bearish, it's not bullish, suggesting that whoever was holding either the $3.50 call or the $5.50 call, they're taking their profits, they're betting on the move being over. So that is something very important to note, something very important to consider. And so looking at the data over here, I'm just going to bring it up to today. So Tuesday, September 23rd, things are looking a little bit better today. But is it, $11, $12 million? No. And so relative, I'll show you relative in a minute. But what we can see for the day, the 23rd, Tuesday the 23rd, we see the stock price go up in yellow, hit a high of 716, something around there. It's the yellow. This is not exact, it's approximate. And then it started to consolidate but fade lower. We also see net call premium in green go up. Seems like it's looking pretty good, but what's the max here? It's about 1 million. So it's not really that much. We do see net put premium being more or less flat relative to that. So currently net put premium is up by about $57,000, whereas net call premium's up by about $765,000. So generally this is looking more bearish than bullish, but we need to consider this relative to what we saw yesterday. So I'm going to adjust this to show 2 days. And we can see that even with the green up for today, the 23rd, it more or less looks flat compared to the cliff that we jumped off yesterday with those calls. So this doesn't really stand out that much to me. This is telling me that this is more likely to turn around, maybe heading towards 550 in the next 2 months. But if I do come back to the 1 day, I don't see any massive spikes or drops. Maybe there's a little bit of a drop here, but that's a difference in net call premium of about 800,000 down to 637,000. So that's not really a big drop. It's not millions of dollars. But we can come back to the flow to look at this one order here at 10:08 in the morning. This was a $9 call that expires June 18th of 2026. So this is 268 days between now and expiration. Lots of time. What's going on with it? Let's look at the data for that contract. And so we can see here candle premium of $1.5 million, 1.548 to be precise. And, right now we saw the open interest at the start of the day was 76 contracts, 76, no thousand, just 76. And we saw a volume of 12.4 thousand. That's why we have that exclamation point there. Volume has exceeded open interest. So, hey, that's looking pretty interesting. $1.5 million, potentially betting long. But maybe they're selling covered calls. That's a possibility. We will have to look at that in the morning, and I'll try to put another post on the channel's page then. So do keep your eyes out for that. But yeah, this is $1.5 million. That's a lot. But relative to yesterday's, $11 to $12 million, that's betting against this going up. This doesn't look so good. But this is also a leap. This is expiring June 18th, 268 days from now, $9 strike. So they could be buying. So, that is something to consider. Just want to throw it out there. But this is not short term. This is not 2 months away. This is, 9 months away. So do consider that. But anyways, hopefully that's helpful. I'm going to go over some stuff with the chart over here before I throw up some drawings. Couple takeaways, just looking at that, at this chart, not thinking about the drawings, okay? What do we see in the stock price? We see higher highs forming, okay? That's potentially very good. What do we see in the RSI? May not stand out that much, but where the cursor is at this high, we can see that this is a lower high. And then where the cursor is at, we can see again, this is a lower high. So as we're putting in higher highs in the stock price, we're putting in lower highs in the RSI. And so that is bearish divergence, and that's not based on two peaks. We have two peaks here, and price went higher. So I think when looking at whether bearish or bullish divergence, it's good to consider not to consider two peaks, because that's really just the beginning of the bearish divergence or the bullish divergence, which would be from the bottom side. You want to see it, okay, this is a trend. This is not one and two peaks. This is three peaks showing bearish divergence. So this is making me think we're going to be seeing a pullback. Also, what we can see is looking at the volume. We saw volume over here pick up a lot, price going up. That's looking good. We saw from over here, price going up about 50%. That's looking good with this increased volume. And then over here, we see volume increasing anymore. After we've consolidated here, we make another move to the upside, going up again about 50%. So that's really nice. So from the bottom there, this is up, about 100%. So looking really good. But then what do we see now? We're seeing a little bit of a divergence between the stock price, the action, and the effort behind it. The largest volume that we've seen, let's see, this one over here, 234 million. This one is 237 million. The largest volume is on a dip. Well, there is some divergence between this not being a widespread candle and this being a lot of volume. There's divergence there suggesting that this dip was being absorbed, it was being bought up, and that we could then be seeing another move higher. But as we moved higher, volume did not go with it. Volume actually went down. So if price was consolidating like it was over here and volume was coming down, that's healthy. But as price goes up and volume does not go with it, that means the effort does not match the move. So this is probably smaller money like you and me being excited about this, pushing it higher, but volume not supporting it. And as this starts to pull back, we're not seeing the same amount of effort buying this dip like we did see over here. So I think it could be rolling over. And then also we do have that 50-day simple moving average, or SMA, that is at $5.50. I did not know it was going to be there, $5.51. But that matches that call that was being sold, $5.50. And then if I throw up my drawings that I went over in the last video, I've not updated these at all. What we can see is, I've got this yellow line here at $5.18, so a little bit lower than $5.51. I also have this inverse head and shoulders pattern, doodled out there. And that's suggesting, well, long term, I think this is probably going to 10. But shorter term, I think that we could be seeing a retracement to around $5.50, maybe $6, maybe $6.50, corresponding with the max pains, not for this Friday, but the next couple Fridays, maybe. And so if we're trading around $7, maybe it's a good idea to trim a little bit so that one can add back in at $6.50 or $6 or $5.50 or $5, whatever it is. Not to exit, because I do think that it will be going up to 10 longer term, let's say 3 to 6 months from now. But, looking at this drawing, let's just map this out. Based on how I've drawn that, that's about 3 months of a pullback to, $5.50, somewhere around there, to get that inverse head and shoulders, right shoulder, drawn out. Maybe I'm wrong about the timing, who knows? Maybe we pull back a little bit quicker, maybe a little bit longer. But yeah, that's 96 calendar days or 67 trading days. That's about 3 months. So maybe we see 3 months of a pullback into the end of the year. And then maybe next year in 2026, we start to rally and then get back up to where we're currently at, around $7. And so this time frame would be, again, about 60 to 70 days, calendar days, and that would be like the beginning of March. So by the end of 2025, we could be back at $5.50, but then by the beginning of March, we could be back at $7. So just something to consider there. And one thing that I forgot to do when I didn't have all the drawings up, I was just curious. to kind of see what the big move was here. I had drawn, this from here being about 50% up. Now here, that's about 100% up. But what's the top that we saw? That's about 125% move to the upside. So that's a really, really nice move. So I think that, that just looks great. We've had a really great move, but I think there's some euphoria. I think that there's some taken profits and contracts and whatnot. And so, yeah, I think that we could be seeing, like I said, this pullback to 6 to 5, somewhere in that range over the next few months. And with that being said, since I have a lot of drawings up here and to just kind of clean it up, I'm just going to kind of redraw some things and go over my thought process. So, I got these Fibonacci retracements here. I'm going to delete them, a couple of them, just to clean it up a little bit for us. So I'm going to delete these two because I want to do a bigger picture retracement. I'm also going to delete this doodle as well. But this shorter term fib, I think that's useful because maybe we do, pull down to one of these levels, bounce, and then start to go higher. I could be wrong about it coming down to 550. So, you do you trade the way that works for you. I'm just trying to manage that risk, take, whatever profits, trim, so then I can more comfortably buy back lower or, whatnot. It sucks when things pull back to not be able to buy. But yeah, just going to delete some of the stuff. And so what I want to do, really, I'm going to do it from the head, actually. The tip of the head to that armpit there. I'm going to do a Fibonacci retracement so we can see where price could be coming. Look at that. The 50% right there is at about 530. That matches with that shoulder. So it's like we're seeing a confluence of levels here. But even if we don't get to 530, prices above the moving average, so that's going to move higher. Maybe it only pulls back to the 382. That's at like 584. And so going from 7 to like 6, that's a pretty big discount. So, like I said, maybe it's a good idea to trim a little and that so you can more comfortably buy back here or not, or just be prepared mentally for that pullback. That's what I'm trying to do. And also, something that we can do, I've got these fib extensions up here. This one played out, from, you can see the little dots there, the pivot points from here to here and then back. We got a 1618 extension up to the top here, to that armpit. So that looks good. That played out. But I don't think it's necessarily going to go higher. So, or at least not beyond the 1618. I'd like to draw a different retracement. And so I do have this one up here that is based on the low from here to the high and then up to here. And I might just, move that forward a little bit. Let's see, that didn't move that in the way that I wanted it to. Oh, okay, that's the fib retracement there. So let's see. Undoing some stuff. So this is the one that I want. This is locked into place, okay? And so rather than unlocking it and moving it, I'm just going to move the coordinates. So let's just say I'm going to move this one to like 310. So it just extends it forward into the future a little bit. And that's like a price target of around $8. I still think that's potentially valid, but I think it could be, like a further, liquidity, getting bag holders up here to buy it and then before it flushes back down because we have this bearish divergence and whatnot. So I think that's really good to consider. But we could also, let's see, what do I have? What's this fib extension? This is going way far into the future. So I'm just going to see what that's based on. So that would be like, coming back to this, form this inverse shoulder here from the head to the top and that shoulder there. So that's actually what I wanted to draw. And that is a target of like $10. 963 is the 100% move. So the distance from the head to the armpit, taking that distance from the tip of the shoulder here up, 100%. Same distance to around 963, or let's round it up to 969, have some fun with it. So yeah, that's kind of, what I'm seeing with the chart. And so with that being said, what's my thought process? What am I doing with it? And this is not financial advice. This is just me trying to manage my risk. Pretty much no position in my portfolio is like diamond hand for years. I want to be swinging things to take profits. And so looking at some of the contracts over here, this is one that I sold a covered call on. This is the $11 strike call that expires in 3 days. So this Friday. And I was going to roll this to the following Friday. So that would be October 3rd, but I'd bump up the strike to $12. I had that order placed. But then today I decided to cancel it because I don't think Nio is going higher. And so I think pushing that strike higher, it would just not get filled and it just wouldn't happen. And so what I was about to do, but because I've got this covered call, I couldn't do it. I was going to sell a covered call with a $5.50 strike that expires in November. And very interesting, if I would have placed the order, it would have been filled today. But since I had already sold that covered call, I couldn't do it. This is just for 100 shares. And so my thought process was, if we look at the chart, I'm going to remove the drawings. You know, what was the high from yesterday when I started to notice, hey, maybe this is looking a little bit bearish. So the high on September 2nd was $7.41. And so I was thinking that if I was to sell a call at a $5.50 strike, I'd want it to be so I effectively sold at the high of $7.41. So how did I do that, or how would I have done that if I placed the order, but I wasn't able to? I don't need the scientific, so I'm going to go back to basic. And so what we could do is do, $7.41, that was the high, and then minus $5.50, $1.91. And so actually, I don't know that would have been filled. I probably did the math wrong. Oops. So that's good that I didn't place that. But yeah, so $1.91. Let's look at the data over here. So what was the high? The high fill was 185, so not that 191. So it wouldn't have been filled, but then that would have meant that I'd collect a premium of $185. So $1.85 times 100 is $185. And then I'd sell, at $5.50 if it closed on November 21st above $5.50. And so while I wanted the 191, so I'd get that total of $7.41. If I had settled for, let's say, because I'm an idiot, let's say, I do a limit of $169. That would have been filled. I'd collect $169. And then that $5.50, I suspect price will not close below $5.50 on November 21st. And so I'd then collect in total, I'd be selling effectively at $7.19. And so thinking about what was the high for the day, the high so far for the day was $7.17. So I would have effectively been selling 100 shares higher than the high so far today. So that's kind of a nice way to use contracts to make a little bit more money. And then also with keeping the possibility that if Nio does close below $5.50 on November 21st, that I would then get my shares back. And so then I would have made $169, or if I had done it based on the high today, gotten the fill at 185, I'd collect $185, and then I'd get my shares back in a couple months. And so I just think that's a really important thing to consider. And so what I ended up doing, because I had sold that covered call for $11 strike that expires this Friday, and I was not able to sell the covered call with a $5.50 strike that expires in November, what I ended up doing, I'm just pulling it up on my phone so I can let you know. I placed a limit sell, so I have in total 140 shares, nothing too big or crazy. I do have a call that expires in June, but that's a $10 strike, and I feel fine about that. I'm not worried about it. But these additional 40 shares, thinking about the high from yesterday. I'd like to sell at 141. So I'd initially placed a limit sell order, and you do you, and I might change this. So you got to do you. You got to do what works for you. I'm just a guy on YouTube sharing my opinion. You got to do you. And so I just placed a limit sell order at 741, and that has not been filled today. But then because I'm an idiot, I changed it to 742 because then there's a 420 in the number. And I might change that after today. Maybe I do a limit sell at 7. I have no idea. But I would rather sell, even if it's just 40 shares. I would rather sell those at $7 so then I can buy them back at 6 or buy them back at 550 or 5, whatever it is. But I think that this is going to roll over. I think that we have seen some euphoria, and I suspect that this video, which I think has a lot of great information and perspective, I suspect that this video will not get 1.9 thousand views, which is disappointing. But prove me wrong. Share this, let people know about it, share your thoughts in the comments down below. And as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel, share, and engage on the channel or on X. I really appreciate it. Have a great rest of your day, and I will see you at 5 p.m. Eastern for the after hours market update. Take care, you guys. See you later. Bye-bye.